Fed Chair Powell came out today and gave the market everything it wanted, right? He came out and basically set the stage for a rate cut in September, where the markets had been slowly lowering the odds over the last few days, but came out today and the market took off. And it was a broad sell. In fact, it wasn't the Mag 7 names that led the way higher. It was the other areas of the market, the more interest rate sensitive areas. I'll talk about that in more detail in today's video. But they just took off. It was a broad sell. And the breadth took off like a rocket today. In fact, it almost took off like too much of a rocket. I'll show you what I mean in today's video, as well as in terms of, will we continue with this breadth and what implications would that have? Or are we going to return back to what's normal in terms of weaker breadth, but the leadership of the market still leading the way higher? And what implications would that have for the market? Which one do we want? So we'll break that down. And in today's video, to talk about what happened with yields. Did they drop enough to price in that cut? I mean, are we really going to get that cut? What if, is there still a possibility we don't get the cut? We break all that down as well. And then our trade idea is a stock that is in one of those interest rate sensitive areas that has a really good looking chart. And we'll talk about how to trade that chart. So let's go ahead and get started. Today is Friday, August the 22nd, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Hey, before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video today. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. You can see our pricing there for all the different levels, including our basic level, where you can subscribe to our site for free and get access to our Market Outlook blog post, which contains a lot of information that basically a one-stop place so you can see what happened in the markets today and know everything you need to know for what's going up, what's coming up in the future. As well as you can get access to our full version of the Market Outlook video, like today's video that we have for our subscribers every day, including the trade idea at the end of the video. So you can follow me on Twitter for more content between the videos from day to day. Also join us on our Market Outlook Facebook group that we've created. If you go to our website, just to kind of see where the Market Outlook is, right at the very top is our Market Outlook Live video archives. You can click on that. It takes you to all the videos that we've done. Here's our most recent one. If you're not logged in or subscribed to it, you get this page here, which again, you have to at least to get the full version of the post. So you can see it's very thorough. It gives you, again, a quick, like, this is what's happening today and why it matters. We kind of had an idea that we get a bounce today, and that was in the blog post from yesterday. So all you have to do is just join free and unlock that post. If you want to see the full version of the video, then you can unlock it there with the upgraded foundation. You can also upgrade to the foundation membership here. That takes you to this page. You can also find it under pricing, and you can join our website. Again, it's only $29 a month, so less than $1.40. If you do the yearly, you get 2 months for free for $2.99 a year. That ends up being less than $1.20 per video. So really, really good value considering the trades themselves, by themselves, only one trade a day have made about $10,000 over the course of this, first 7 months or so, first 8 months of the year. So way more than the $300 it takes to get access to all those trade ideas. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. Nice, really good bounce to the upside today. You can see we rebounded in a big way. So we had the 5-day drop, and we talked about this last couple of days, but it wasn't really that significant of a drop. We had much bigger 5-day drops, even though we didn't have a 5-day decline since April of 2024 on SPY. SPX had like a small 5-day decline here in January somewhere. I think they said on TV. It might have been one of these days. But the reality is, like, it was a small 5-day decline, relatively speaking. So we knew, like, we expected, right? That's kind of what we've been talking about in the Market Outlook. We've been expecting a bounce, and boy howdy, like, we've been expecting it for the last couple of days, and boy howdy did we get one today. So the market was set up for this type of bounce. Obviously, the market didn't know what Powell was going to say, but it was set up for this type of bounce, and it rebounded in a big way. The intermediate line turning higher, the near-term line rallying, the momentum line getting, so the near-term line crossing 40 and 50 was above 60 for a good chunk of the day. The momentum line well higher than the momentum line. It's or near-term line. It's in the upper reversal zone. So that's all really good. Like this short-term bounce. The last time we saw this short-term bounce like this was back over here. All right, before I went on my cruise there on July 17th. And you can see the nice little rally we had off of that. And before that, it was right here on June 23rd. We had a nice little rally come out of there. So that's, here's another example actually right here on May 27th. Again, when on a day that the near-term line crosses 40 and either 50 or 60, ideally 60, but at least 50, and the momentum line ends up higher as well as in the reversal zone. That would be better if it's above 90, but if it's in the reversal zone, great. So that is about as good of a short-term bounce that we can get. So the expectation is that we should bounce off of this pretty nicely, going up to new highs. Now remember, we are very mature in the intermediate run, so we are not starting a new like 10% move here. We're already up 1.5% today. It's not like we're going to go up another 8.5% to the upside. That's unlikely, not impossible because nothing is, but it's unlikely. Like this will just be another near-term rally of maybe 4 or 5%, like some of these others. Again, that we're already almost probably halfway there with this one. Like the rest of the days won't be nearly, like we're not going to get 94-point ranges every day. It's going to be in the 50s or maybe the 60s if we're above average, because remember 53 for an ATR is still really low. But more than likely it'll be in the 40s and the 50s will be the daily ranges. So there'll be small moves, just like some of these. Like this was a 58-point range. That was a 56. This day was a 51. That day was a 79. Then we follow that up with a 40, and then a 43, and then up to a 60, right? So that's kind of typical, and we'll see that again here now that the ATR is where it's at. But a nice little rally. The NASDAQ 100, you can see its near-term line crossed above 40 and 50 as well. The momentum line did not get into the upper reversal zone. We did come off the highs a little bit, but its near-term line almost crossed above the intermediate line. So that's how close we are. So again, not as bullish because of the momentum line. You would like it to be above 80, but at the very least, it is higher than the near-term line. If it's above 80, then that means a good chance the near-term line gets above 80 as well. But you can see how close we are to a really good bullish cross of the intermediate line there. Again, closing above the bull tag high, right? So there's the bull tag, closing above that high of that bull tag there. Great. That's a great move. And then you take a look at the Dow Jones Industrial Average. It broke out to a new high. So the first time, well, I guess a new closing high. So that's a really good here. You can see crossing 40 and 60 momentum line. I mean, again, about as good a short-term bounce as you could get on the Dow Jones Industrial Average. And then finally your Russell 2000 also breaking out again in a very big way. So you can see breaking above all those bear tag highs that we got back over here. So really good bullish move there. Again, breaking above multiple lines. Yesterday we were slightly above 40, but really like today is a big move. We crossed 40, 50, 60. The momentum line was above it. It's above 90. Like really good bounce. Like I cannot say enough about the rally that we had in the major indexes. Again, we were anticipating this kind of move. It took a couple more days before it happened, and it's probably bigger today than anybody expected. But still, like that's the kind of bounce that we were expecting based off the market outlook and what it was showing us. And here we go. And now going into next week, the market outlook suggests that we should have a pretty decent week. Again, I don't know if we're going to go up 4% every day. We probably won't even go up 4% for the week. But there's a good chance that we could be up pretty nicely next week. Again, based off of how strong this bounce was to end this week. Let's take a look at speaking of the weekly chart, let's take a look at the weekly chart. Remember how we were, those last couple of days, we've been flirting with this transition candle, right? It was a lower high, a lower close on the Hakinyashi, a lower high, where we came really close to getting an equal high. It was just like 3 points off from a higher high. But we finished with a higher close. So after all week being a lower close, we finished with a higher close at 64.33, and we're 33 points above that. So, we're set up for a good bullish candle next week. PPO is above 5%. I mean, this is good. A nice, good bullish week, and with prospects that we can continue higher. We got the 3 red arrows here this week on the NASDAQ. Now we're back to green. So I mean, 3 red arrows is a good buy signal. When you're bullish like this, you get 3 red arrows. It's a good opportunity for I mean, it either starts a bearish trend or it bounces up almost immediately within a day or 2 or maybe 3. It can bounce up in 3 days as well. But you can see all these 3 red arrow signals all bouncing up or back to 3 greens on the Russell. The Dow has been 3 greens this whole time. So really good opportunity here for a continuation of the trend. Here's the 2-line version of the S&P. You know, getting above the 8-day moving average. Remember I told you when you break one line at a time, you know, it tends to not really take to the downside. And so we saw. And now here we are right back above both the 17 and the 8 and well above the 8. Like the MACD is turning back up. It's been converging, but again, you have room for it to go up before you get to that 1% level, which can be a ceiling when you're, again, not coming off of a major low. Every other time you can see it's about as high as it gets. Let's take a look at some of these other oscillators like the DMI. The DMI is back to bullish levels above 30 on the positive indicator, just like that. The negative indicator is falling. Needs to get below 20 to get that ADX rising again, but it's back to bullish levels. The RSI and the CCI are back to bullish levels, back above 60 on the RSI, back above 0 on the CCI. If you take a look at the Ichimoku cloud, we still are maintaining a very strong mature trend. We're back above the midpoint of the 9-day range, which is that green line. The rate of change still positive. You know, this is great. I mean, this could not have been a better day to start off next week on the right foot. Let's take a look at the Bollinger Bands and the Keltner channels. You can see it, boom, right back up to the upper quartile, the bandwidth. The bandwidth is low. It looks like it might start to expand a little bit. It's not going to expand a lot on the bullish move, but it can expand some to the upside. It's at a relatively low level, and you know, as long as we continue to push, you can see the bands themselves have actually come back inside the Keltner channels. That's why you have the red dot down here. But we have a renewed bullish momentum and opportunity that we can, you know, build on that to the upside. So I think there's a very good chance that we have that. If you take a look at the 4-week range, remember we went, you know, all week this week and last Friday without a new high. Well, here we go. We got a new high today. Just like that. So after being down all week, we finished the week positive because of today's rally. So really, really good move. They're ruining, you know, we're back up to 100 on the positive indicator. The negative indicator still has room to go down to 0. So, you know, you would expect that we'll kind of build on these new highs. If I take a look at the volume and the trading range, I showed you the range being well above the average. The volume is also above the average. That's kind of what you would like to see when you're kind of starting a near-term rally like that. It doesn't have to be insane, but you know, a little bit bigger, because now you can kind of come back down. I mean, we're up to 0.89, so now we can drop down to 0.8 before, you know, if once you fall below 0.8, now we're extreme and now we're susceptible to a, you know, to a move to the downside. So now, because of today's rally, and you might get another day, maybe another day or two, but maybe none at all, right? We might just start to grind immediately after today's rally. But that has room to come down now. Only a little bit, but it has room to come down because, remember, markets are bullish when it comes down. And then there's a lot of room for volume to come down, and there's a lot of room for volume to re-engage, right? The money flow had been weak here, very, very weak. So now it's bouncing back up. Now, interestingly enough, we're back up to new highs, but the money flow is not anywhere near new highs. So a little red flag, just a little red flag there, especially with the index still right at the midpoint of the chart in neutral range, so not above 60. So just a little bit of a red flag that we need to pay attention to there. Let's take a look at the volatility index. Way back below 15. Perfect, right? Back below 15. Now, here's a little bit of maybe an orange flag, right? The VIX, the VIX relative to the VIX 3M. Is down to 80%. That's an extreme low on the VIX. Usually, we don't usually stay down there for very long, which means the VIX rallies off of this. So keep that in mind. The VVIX dropped below 90. So just in one fell swoop, the VVIX dropped below 90. So your correlation now is bouncing back up. So this might be it in terms of like our bounce. So that's good, right? So getting back below 90, VIX getting back below 15. The ratio down the bottom left is, you know, easily in bullish territory, maybe a little too bullish from a risk appetite standpoint. So we'll kind of keep our eyes on that, but nothing too significant. Like the red flags that we have now are not too significant. Like it's actually looking pretty good for the markets with this move that we had today to, again, kind of correct the last few days and then really take off here to the upside. All right, let's go ahead now and take a look at what's driving this price action. Obviously, the big news of the day was the Jackson Hole speech, right? Fed Chairman Powell came out and basically set the stage for a rate cut in September. That's he said rate cuts may be warranted. He said that he basically, now the market especially took it as that we are setting the stage for that cut. So you see the dollar drops dramatically, almost a full percentage point, which that's a big move for the dollar. I mean, just to kind of give you some context on just how big that move is, let's go to the normalized ATR here for UUP. So today's range was 0.33 points and the average is 0.14. So we're more than double the average range. So huge, like 0.33 is off the charts of the actual ATR we've had all year long. Like, in fact, if I go back 5 years, like again, 0.33 is right here. So, I mean, that would be back over here where, again, with the biggest ATR that we've had, that's how big of a move it was. So a huge move in the dollar, right? Significant. And you saw that here, obviously, a big outlier to the downside. Commodities were down and bond yields were down, right? So stocks were up. Bond yields also responded negatively to the speech. You can see when the speech got unembargoed and people were able to read it, and then he gave it. And you can see if I go to the 10-year yield, it dropped, right? It dropped to 4.26%. But here's the kicker: is it didn't drop below 4.25%. Remember, 4.25% is the range. That's the bottom end of the range of the current Fed funds rate. Again, the Fed has rarely cut rates when the 10-year yield was this far up above. At least, especially started a rate cut cycle when the 10-year yield was already this far, like was pretty much at the same level. Usually, the 10-year yield is dropping or has dropped below the Fed funds, and that usually kickstarts the Fed to start cutting rates. So this would be rare. Like you can see, like back over here when they started cutting rates in September 18th of last year, we were at 3.68%. You remember the Fed funds rate at the time was at 5.25%. So significant drop. Well below the 200-day moving average, well below its long-term averages, right? Whenever I've shown you this before, but when you look at the long-term chart here, there's the orange line is the 1-year return, sorry, and then this blue line will be the 2-year, and you can see we're pretty much right at the 1-year average, which is what, 4.288%. So we're just 2 basis points off of that. And then the 2-year average is 4.27%. So we're 1 basis point off of that. So, I mean, we are sitting right at the 1 and 2-year range. Again, this is where we were September 18th last year when the Fed, or September 17th, the day before, the Fed cut rates. And we were well below the 2-year average, and we were way below the 1-year average. So to be sitting right at those two averages, and those averages sitting right on top of each other for that matter, that would be very, very rare for the Fed to cut rates. But that doesn't matter. Like right now, the odds, the Fed rate cut odds, we'll come back to these charts here in a second because the breadth was just outstanding today. But the odds for a rate cut jumped in a big time way today. So they jumped up here to 84% from 75 at one point in time, down to 66% yesterday. So, up to 84%. So really, really good jump to the upside. I mean, again, it's baked in the cake now. Unless the market really takes off to the upside, if the market continues to get bullish because of all these other factors, like we had Google and Meta signing a deal today. We had Intel getting a stake from the U.S. So your Mag 7 names, all did really well. And I mean, of course, you'll see here in a second, the cyclicals did well because of the drop in the yields. But these Mag 7 names did well because of their own, right? They're not so prone to the Fed cutting rates or hiking rates. And you can see Nvidia, even though Nvidia stopped selling chips to China, their H20 or whatever they call them, chips to China, it still went up 1.75%. There's Meta and Google, 2-3% on both of those after inking their deal. Chip stocks doing really well. You see Broadcom's there, Tesla bouncing up 6%, Amazon bouncing up 3%, Apple bouncing up 1%. So they like if they continue to outperform, then like, or at least they start to outperform again, then we should be really good. But that wasn't the case today. Today it was small cap stocks. It was really, small cap stocks taking advantage of the drop in anything that was rate sensitive, took advantage of this drop in rates again to the low end of the scale. So when you look at the QQQ relative to IWM, like we opened the day on its 200-day average, a big drop there. Now, a lot of times when you get a big drop like that, it's hard to sustain it, right? That's a pretty extreme move. You can see the CCI is below 250. The RSI is down, well below 40. Like that's an extreme move, and we actually rallied by the end of the day. Like the Qs outperformed IWM from the open, even if IWM started the day much higher level than the Qs did. Let's see here. You can see over here that IWM started the day really well and then really picked it up, and then from that point the Qs, from this point here, the Qs outperformed slightly, but enough to get to become off the slow. So I made a big drop. That's a big drop. But my guess is, based off of how you usually see these kind of big drops that kind of come out of nowhere, especially when they sit on moving averages or just below them, like this case. Here's another example there. There's one over here. We tend to bounce off. This tends to set the low point. RSP also really outperformed SPY. Hitting the 50-day. Again, another day to the upside. I don't know how many days it's in a row now. 1, 2, 3, 4, 5 days in a row. The RSP has outperformed SPY. We're kind of bullish. We're not really. We're stronger than we have been, but we're not breaking that 50-day yet. And remember, we don't want it to because it's negatively correlated with the markets. But again, it's kind of at a peak. So it looks like this week has been a great week for the broadening trade, right? Everything, these cyclical areas of the market doing so much better. Like the Qs were down 1% this week, but well off their lows. IWM was up 3%. So that's a big rebound in these kind of, again, rate sensitive areas, like the small cap index. But that's not a ratio that we want to continue to outperform. Because of that, though, we had a big strong move in breadth. Now, keep in mind, it's one thing to get a big strong move in breadth. Let's go to the McClellan oscillator. It's one thing to get a big strong move in breadth when we're coming up off of a low point, right? Which we should. When everything's dropping, everything rallies. That's the way it should go. And then you can see here we had a big strong run of breadth to get us up to new highs, right? When we're breaking through resistance, that makes sense. But we're neither. We're doing neither. We're in a very mature intermediate run. We've already broken through resistance. This old high point over here. So there's no major resistance to break through. So usually you can see, like right here, for an example, when you've been on a mature bullish run, and then all of a sudden you start to get this run of really strong breadth, that usually leads into a decline. So again, one day it doesn't make a difference here. But if we get another week or two of that kind of move of what we see today, if we get another week or two of this, and this moves up to the 200-day moving average, and the Qs break there too, like eventually that's going to lead to some weakness in the markets. If, on the other hand, we return back to normal next week, then we should be fine. I'll talk about that here in a second. But I want to briefly show you the number of stocks above the 50-day moving average. Look at that spike, up to 361, so above the 70% mark. The number of new highs breaking out to almost 200, big time move there. The number of stocks showing bullish patterns got back up above 60 on a weekly chart. So finishing this week back up above 60 after spending most of the week below 60. So the breadth really improved. So that new highs, look at the big jump we had here at 532. Great, right? That was a great move. Like it was a rebound off of a 5-day decline, but now most likely that's not going to persist, and that's okay. Most likely what we're going to see, like again, you look at the sector rotation. Here's our sector rotation here. And again, you can see how we performed today, and we'll look at that really quickly, and then we'll zoom out to the week that was. But here's today, and discretionary is up. That's great. Amazon, right? Tesla doing very well. Those are two big time stocks in that index. XLK and XLC both lagging slightly, but both lagging the S&P. And energy, materials, dollar sensitive areas doing well. Real estate, industrials, financials, rate sensitive areas. And all your safety trades here, utilities, staples, healthcare, still staples, remember, got hammered hard yesterday. Walmart, they're lagging behind. So let's zoom out to the week that was. Remember, with the Qs being down on the week and IWM being up. Well, look at all these sectors that are all up. Everything is up except for, remember, going into yesterday, everything was up except for the three sectors. Now, discretionary got above zero. In fact, it got way above zero by the end of the week. But the other two didn't. They rallied, but they still stayed negative. That's the QQQs. Everything else was positive. That's not normal. And that's not bullish, right? So I know a lot of people say it is because they want these other stocks, maybe because they're exposed to them. But the reality is the market's a market cap weighted index. The biggest stocks that are the most, that affect the market the most, you want them in these sectors to outpace. Because if these sectors are outpacing, it doesn't last very long, or it either signals that we're close to the end of this intermediate run, right? It's, it's okay for these to go up, as long as these other sectors go up more, because they're market cap weighted. They're the strongest sectors in the market. So again, if we get another, I don't think we will. I think next week we'll return back to normal and we'll be bullish with XLK and C leading the way higher, and I think we'll be fine. If you look at the ratio chart here of XLK to XLC to XLE, which is kind of a good proxy for what we're talking about here. In terms of the cyclical trade versus XLK. I mean, again, it's down here to the 50-day moving average. So if we bounce off of this, which is what I expect we'll do, then we'll be back to normal. We get a good good bullish run with XLK leading the way higher, 86% correlated with the market. But if we break down towards that 200-day and the market stay bullish, then that's probably going to lead us, as it did over here at the beginning of the year, into our intermediate decline that we ended up having, and then the correction we ended up having this year. So we don't want that, right? So we should be rooting for XLK and the winners to start winning again, and recognizing the fact that if we continue to broaden for the next week or two, and we get a really good, breadth indicators here, if we continue to broaden on this, then and we get a move like this, then we should expect that we'll probably get our 5% tag coming. And again, it won't be next week. We won't get the 5% tag next week. We won't get it the week after. But if we continue to have a bullish market with that broadening trade working over the next week or two, then probably through September, sometime in September, we'll probably get that 5% tag, would be my expectation. All right, so that brings us to our trade idea of the day. So let's take a look at what we got going on here with the market forecast. So let's pull up Lennar Corp. You can see, strong bullish posture, dark green shading in the green line, market sentiment lines bullish, intermediate posture strongly bullish. You can see the nice little bounce on a near-term basis, crossing above 40 and 50. Momentum lineups, great short-term bounce. We already had been pretty strongly bullish to begin with, but we also have to remember we had been pretty strongly bearish before that. So we're just barely crossing the 200-day moving average. The 50-day hasn't crossed it yet. So, there was the opportunity for us to have a bullish run. You can see when you cross that 200-day moving average, it can be, after having been below it, it can be a really positive development. And so there's opportunity. We have some strong momentum as it stands. But you can see the weekly charts looking good. We had a strong week on the weekly chart, finally crossing above the 40 week. You can see how that can be a really bullish thing when you cross above the 40 week. So we have that's going on right now, 40 week exponential moving average. Let's take a look at some of these other oscillators like the DMI. You can see we're above 40 on the positive indicator. We're well below 20 on the negative. So we have a very strong trend. It's not too extreme. It's not, the ADX isn't above 40 yet, but it's a very, very strong trend here to get to this point. The RSI and CCI also reflect that. Above zero, have been above zero, but if you look at the weekly version on the CCI, we're above 200. So a very good move there. If you look at the daily RSI, we've been above 60. We're above 70. So that's a very strong run. If you look at the Ichimoku cloud, it's not nearly as mature as the broader markets, but it has reached mature levels. Again, when you look back, before when we were below the 200-day moving average, and over here, and you got to mature levels, we really went mature, right? That's kind of the idea, or at least the hope here going into its earnings, which happens to be the day before September expiration. If I take a look at the Bollinger Bands and the Keltner channels, not surprisingly, we're up into the upper quartile of the bandwidth and above the upper Keltner channel with some strong momentum. The bands outside the channel still. So we have an opportunity here. I don't want to be too aggressive because, we're chasing a strong move, but I decided to go out to a long vertical spread, go to that mid 30s delta, buy 2 strikes away like we typically do when they're dollar wide. And we got about a 1.5 to 1, almost about a 1.5 to 1 reward to risk ratio. I'm closer to 2 actually than it is 1.5, but then my risk is really small. So just in case that earnings is really bad, right, we can keep our risk on the down low and still get a pretty decent reward if it continues this trend to the upside. And there's our trade for today. All right, well, that does it for our free Friday market outlook video. Give you a taste of what we do throughout the week. Our Market Scholar subscribers get access to this video every day throughout the week, including the trade idea, as well as the Market Outlook Live, where we track those trades, and the Market Outlook Trade Tracker, or manage the trades, excuse me, and the Market Outlook Trade Tracker, where we track the results of all of our Market Outlook trades throughout the year. So everybody gets access to that, but this kind of gives you a taste of what it's like. Thank you very much for watching. Remember, if you want the full versions of all the rest of our videos, it's only $29 a month. So that works out to be in like $1.40, less than $1.40 a day per video. So it's not very much at all. You can get access to that with the link down in the description or the pinned comment below. Thank you for watching. Subscribe to our YouTube channel so you know when the preview videos are posted. Hit that like button, comment down there, share it with anybody you might find it interesting. Follow me on Twitter for more content between the videos. You can also follow me on Facebook, LinkedIn, other areas, social media channels as well. Like our content there too. That helps us get our stuff out there to everybody. Have a great rest of your weekend, everybody, and we'll see you all on Monday.